Hello, everybody. So today I bought more Enphase, and I want to talk about Enphase today. Because Enphase, I mean, depending on the website you look, but if you look at the enterprise value of Enphase, it's under $13 billion at enterprise value right now, and it's trading at 96 bucks a share. And it's absolutely crazy because this is a company who in the future, not that long, 2 years, 2 years and a half, maybe 3 years max, they're going to get a check, more than $1 billion, a check from the US Treasury. And of course, when you do a forward PE on this, you realize it doesn't stand. And the stocks are supposed to be the net present value of future cash flows. And clearly, with how much IRA money they're gonna get, this price at $12.7 billion EV does not even represent the net present value of future subsidies. Like Enphase right now is trading below, in my view, the net present value of how much money they got falling from the sky in this IRA bill. Like that valuation alone is below how much money they're gonna get. They're gonna get so much money. It's not even funny. It is not even funny. So, stocks down. I hope Mandy, Enphase's zero nonsense CPA, and I really love Mandy and Badri. I think they are a great team. They are no BS kind of people. Like in the call, they're so straightforward. They say it like it is. And I really hope that she and Badri are spending that billion buyback money that they just approved at the end of Q2. They have $1 billion approved by the board, and I hope they're spending it fast, because at this price, it is a bargain. But let's talk exclusively about the IRA benefit in this video. I don't want to talk about any of the technicalities. I definitely don't discuss short-term movement. It may go to 70, it may go to 60. I don't care. I'll be buying at 60 if it goes to 60, but it may also bounce right back. So what I care about is having a big position in Enphase. That's what I care about. I don't care about the average cost, because to me this stock is going to be insane, continue to be insane. So let's talk about the IRA benefit. I don't think any of it is reflected in the stock price. So let's go over Q2. Let's look at Q2. So the market, of course, didn't even react or anything. In Q2, they only got about 1.5 million of IRA benefit. They opened their factory. They had their grand opening with the President of the United States making a speech. Badri made a speech. Everybody made a speech. And they get all of this money. Everybody's happy. They created a few thousand jobs. Only 1.5 million in subsidy. Nobody really cares. Now, let's talk about Q3. Q3 is a little better, but not enough for a market to care, clearly, when I look at the stock price movement. But Q3 guidance was for their usual margin, like 43, 44%, between 42 and 45%. So let's call it 43.5% gross margin, which is excellent for hardware, by the way. It's like iPhone-style margin for hardware, excellent margin for hardware, almost as high as semiconductor margin, like the AMD margin. So this is really good. And they are getting also subsidies, but pretty small, right? At 15.5 million IRA subsidies, that's 60 million a year. Not enough for the market to move too much, but more meaningful than 1.5 million. But let's move on, right? Because this is a company that's ramping its US manufacturing pretty fast. So, what about 2024? And before 2024, I just want to go over the part of the conference call, the last conference call, the Q2, which often gets overlooked, which is the CFO part. If you listen to conference calls, most people will skip the CFO, but I really think it's a bad idea to skip the CFO, because we have very valuable information. So let me read what Mandy said. Based on the latest guidelines from the US Treasury, we expect to claim the production credit by direct pay. So they're going to get direct pay from US Treasury. They go on the website and they get money. And that money is going to be in the hundreds of millions of dollars. Let me tell you right now. Just straight direct pay. So what about the 2024 guidance? They estimate that they will have reached their manufacturing capacity by the end of this year. And so for full year 2024, throughout 2024, they estimate they're going to do 4.5 million microinverters per quarter. So that would mean 18 million microinverters And with their current microinverter, they make about $26. You may say, oh, that's low. Why do they make just $26? Well, that's because they are sharing a part of that IRA benefit with their Flex partner, which is their Flex Manufacturing is who they manufacture by. They have a supplier, right? So they're sharing a little bit of that IRA money with the supplier. That's why it's lower. But it's still very good. So 18 million microinverters made in the USA throughout 2024 will equal to $468 million. Direct pay, straight from the Treasury, right? Mandy gave us the details. Direct pay, this is amazing. This is amazing. So this is on top. Let's assume that they don't grow their revenue at all this year. Let's assume that the business is the same as last year for this year. Let's assume that it's flat. Which, I mean, realistically, if I was a short-term analyst, I would say we may have a down quarter this coming quarter, and then the next coming quarter, and then we will get back into growth. And then I would say, could we be flat within the next 12 months? I don't think so, because I think interest rates are going to drop really quickly. But, I've been proven wrong for a year and a half on this. So let's assume they're going to stay flat. And what if they stay flat? So that's $636 million operating profit. And they have a great EBITDA margin at 25%, right? So a little lower net profit margins, but really good. And assuming that profits are flat, so let's take the $468 million, let's add it to $636 million, and forgive me, this is a back of the napkin calculation, right? But let's just assume this, and let's just call it profits. This is a company whose profits, and not GAAP profits, we're just going to call it economic profits, who economically, this company economically is going to be making 74% more money throughout 2024 than it did throughout 2023, assuming everything stays flat. And that 74% increase in proverbial money made is just from the IRA benefit. This is just for the $468 million check. To me, the present value of this company does not even represent the future cash that it will be coming in from the IRA, right? It's like having a direct access to the US monetary printer. It's like you're making inverters and you're getting a direct access to the US monetary printer. This is amazing, in my view, amazing. And it will not stay flat. It will not stay flat because analysts are expecting 29% revenue growth. And the stock right now is trading at $12.7 billion. So assuming $1.1 billion in profits and assuming zero growth right now, we have an 11.5x PE. But it won't stay flat. It will keep growing. 29% revenue growth is what analysts are saying. And I have no doubt imagining this company will continue its revenue growth. Right? But right now, assuming no growth, this is an 11 times PE stock. For a company that has a very bright future, 10 years out, it's mind-boggling. It's mind-boggling how cheap this company is. But let's get a little more into the number. So, are they going to stop at an 18 million capacity in microinverter per year? No, they're not. Badri has already said that they will not stop at 18 million. If you go back to the old calls, right, when the sentiment was a little more long-term and when the analysts asked better questions, if you go back to the old call, you know that Badri has no issues using the USA as their manufacturing hub for the world. And why wouldn't they? They get straight IRA money. Of course it's going to be a manufacturing hub for the world as long as they get that money. Right? SolarEdge, on the other hand, they said the exact opposite on the call. That's why you can't do a fair comparison of SolarEdge and Enphase, not only because SolarEdge gets about twice as little money they make in the US than Enphase. The government clearly shows microinverters as the winning tech. That's number one. But then number two, the CEO of SolarEdge was pressed on the conference call. Are you going to increase your manufacturing in the US? And they say, no, we're going to keep it as is. And it's understandable, right? They're based in Israel. They're an Israeli company. They don't want to move everything in the US. It's understandable, but it's easy for Enphase to make the USA the manufacturing hub of the world. It's actually easier for them. They can just make everything here. They are from here, right? So, what about manufacturing abroad? And I remember an analyst asking him about this question, and I think he dodged the question, Badri, when he was answering this question. But But in my view, there is no doubt that if demand across the world for microinverters were to wane, they're going to operate their manufacturing facilities abroad at kind of idle capacity, like as little as you can, and they'll shift as much of the manufacturing to the USA because they get the money in the USA. You'll bet they'll do that, right? They will not grow manufacturing outside of the USA now. Now manufacturing will grow within the USA for the bulk of that growth of that company. So that's the first, but wait, are they going to stop at 18 million capacity? No, they are not going to stop. And in fact, how much bigger could they get than 18 million in capacity? Well, these factories that they're opening are all about the same size, roughly. But if you go back a year and 1 month ago, when Enphase, when analysts and the market was granting much more, a much brighter future to this company because interest rates were not as high as they are today, Badri was on the record saying that he wanted as many as 6 factories in the US, and they settled and stopped at 3 because of the environment, right? But initially, he had said between 4 and 6. So as much as 6. So assuming all factories are roughly the same size, which they would be, right? Because you have minimal economies of scale that you have to achieve in manufacturing facility. He's on the record saying as many as 6 US factories. So as soon as we have a rebound, I have no doubt that there will be more than 3 factories in the US. And 6, if you have 6 of them, you would double the capacity again, right? So moving from 18 million to 36 million. So that's one doubling of the capacity. But wait again. What else? What else can we say? Wait again. Is this the only way they're going to make more money? And by make money, I mean get more subsidies? Is this the only way? No, there's more ways. So let's look at how the subsidies are set up. The subsidies are paid based on watt AC, right? That's the output. Microinverters get 11 cents. Right, you can see residential inverters, which is what SolarEdge makes not quite half, it's a little higher than half, but it's only 6.5 cents. So they get much more, right? So that's microinverter money that they make. It's based on watt output, right? It's based on AC watts. So what are the AC watts of IQ8, which is their current series, which by the way is getting old. In my view, getting old, not too old, but the earlier ones are getting old, and I think IQ9 is around the corner. But IQ8, what about IQ8? So IQ8 right now, most of the IQ8 that installers install are between 330 and 360 watts, and this has to do with the fact that the panels have gotten bigger and more efficient, and so. And you take 330 watts, right, and multiply it by 11 cents. That's how much money you get, minus what they share with the local manufacturers, and they share a chunk of the money with that. Which then is a whole over debate where should they be vertically integrated? Should they own their manufacturing facility to get all of that credit? Right, that's another topic of debate. But let's see by how much wattage has increased compared. And to make it meaningful, I went back to IQ6. The IQ6 is their 2018 model. So their 2018 model at a max output AC power of 230 watts, right? VA is the same as watt. So 230 watts. 230 watts versus 345 watts today. So in a matter of 6 years. So in 6 years, and this is exactly a 50% increase in the AC output of the microinverter in 6 years. Now, what do you think is going to happen to the subsidies, given that the subsidies are given on a per AC watt basis, right? What if IQ9, IQ10, IQ11, whichever version that is, what if there's a version that's going to have an over 50% increase in output? Well, you'll get 50% more subsidies. And we know they are already working on this through their small commercial microinverter that they are developing right now. And they also have a version of it that they are developing for the Brazilian market. We know that their engineers are working on a microinverter solution nearing, 500 watt AC, which would be a 50% from where we are today. 495 would be a 50% increase from where we are today. So will it be IQ9? Maybe not. But IQ10, I think, certainly will be close to 500 watt AC power per microinverter. And then imagine if you make 36 million of them in the United States. Well, let's imagine together. all of this good thing going on. So let's imagine Badri builds now 6 factories. We have 3 today. Let's assume that he builds 3 more. That's 2x. So now we're going to be making 36 million microinverters in the US. And let's also assume a 50% increase in the AC output of our microinverters, right? The IQ9 over IQ10, let's assume they're going to be at almost 500 watt AC in output, right? So that's another 50% increase in how much money you make, right? So let's assume that. So today in 2024, we know we're expecting 468 million. How about 2025, 2026? Let's assume they double. If they double the output without changing the product, same product, just twice as many factories, you're at almost $1 billion, right? 936 million. And then let's assume the product gets better and has 50% more wattage. Let's assume it's IQ10. Then you get at 1.4 billion. Like, this is a company where, I have no issues imagining in 2026 them reaching 1.4 billion in subsidies for a product that they, by the way, keep selling and keep making a 45% gross margin on. And by the way, there will be more subsidies, right? There will be subsidies for batteries. There will be subsidies for other parts of the setup. The buyers are getting the $7,500 tax credit. The short-termism, in my view, does not capture this opportunity. And lastly, it captures it even less when we take into account the fact that IRA subsidies have been voted until 2033, so 10 years out, with a slow phase-out period until 2035. So this is technically 12 more years of subsidies. If you project the future cash flows that we're going to get from these subsidies, we are nowhere near the value of that company. I mean, this is insane to me. This is insane. I am very bullish about this company. By the way, you could make a similar argument as to how much money Tesla is going to get, because Tesla is going to get a lot of money from its mega packs. This is also something that analysts don't look at for Tesla. These subsidies, in my view, but that's my experience from Europe, from when I was still in Europe in 2007 in Europe, they had these crazy subsidies and the governments ended up really regretting it. Something similar happened in Canada a few years back. This is an example of poorly designed subsidies for the taxpayer, but wonderful subsidies for Enphase shareholders. And I'm so happy to be buying the stock at $96. I think the future is bright. I have no idea what's going to happen on Thursday evening after the call, but if the stock's down, I'll be buying. So anyways, this was not investment advice. This is just me, and this is just what I do. This is not investment for anybody watching, not investment advice for anybody watching, just entertainment. I hope you were entertained. I appreciate your likes. I appreciate you subscribing to my channel. Thank you so much for watching, and have a wonderful day.